Everybody, I'm Cheryl Casoni, and joining me for the hour, James Frischling, co-founder and president of NewOak Capital, and FoxBusiness.com's Dunstan Pryal. Well, those Greece bailout hopes fueling Wall Street, but how much can we expect when the only real change that we've seen with this is just this administration shuffle, reshuffle, whatever you want to call it? Greek Prime Minister Papandreou, he's making the defense minister the finance minister. The finance minister is going to move to the environment and energy ministry. And what do Greece's problems mean for stocks here, especially our financial stocks?
So bottom line, when you look at a flattening yield curve, a slowdown in the worldwide economy, especially in the U.S., I've been bearish on U.S. banks for a long time, and I continue to be so. They are a little bit more insulated. They don't have as much pure Greek debt exposure, but I think the multiplier effect, the implications, could certainly hurt them and many other financials, and so I recommend avoiding them at this time.
Jim Frischling, I mean, he's got a great point here. I mean, you've got Angela Merkel, Nicolas Sarkozy, our allies, our military allies, but also our financial allies, frankly, that somewhat did kick the can. If you look at kind of this, well, we're going to just, they have to convince basically private bondholders to not sell off when they have the opportunity, Greek bonds. Would you do that if you were?
I think they're looking for the Holy Grail. The Chancellor and Merkel and President Sarkozy are getting behind the ECB to protect its reputation and to protect its balance sheet, and they got on board. But the fact is, trying to find a way for private bondholders to share the loss without triggering an event, a default, I just don't think is a sustainable solution. They might force it on people today, but it's not sustainable.
Default's a disaster, Dunst. Well, it now looks like the AARP is reversing its position on Social Security. The Wall Street Journal reporting the powerful group is dropping longstanding opposition to cutting benefits, realizing cuts are just inevitable, and they're probably right. We just received this, though. David Sertner is the legislative policy director for AARP. He just told Fox that our position has been the same for decades. We need a package of revenue and benefit adjustments to make it solvent. Jim and Dunstan, I'm curious what you both think of this, because this could change the debate, Jim, on the debt side of it for entitlement programs. But AARP still, again, they protect seniors who vote, who may go Democrat. And I'm not sure that's what, the other side wants to see happen.
I think the AARP realizes change is coming. So they can either have a seat at the table and be part of a realistic discussion, or they can continue to take a stance that essentially no changes are allowed. And I feel I can't help but listen to this story, watch this story, and think about what's going on over in Greece, for example, and not making tough decisions today to benefit ourselves going forward. So I think they realize that no change is not acceptable.
And Dunstan, I misspoke. What I meant to say is that they may go to the Republican side. Remember the AARP actually lobbied against the Bush administration when they tried to do this.
In almost every conversation we have on the show, I love to interject the politics. I want to lift the politics out of this. I know you can't, and it's difficult, but I really hope we are in this instance. It looks to me like AARP is saying, as you said, Jim, changes have to be made. The reason we're in the problems that we're in right now is because of special interests saying, well, you can take everybody else's, but don't take mine, and the politicians giving to them again and again and again. To me, this is the second bit of sort of common sense good news we've had this week. There was the Pandora's disappointing IPO earlier this week, which showed a little bit of common sense out there. This, too, shows me that somewhere out there, there are some people thinking and saying changes have to be made, and we're going to do something about it.
But their resolve is going to be tested, because their entire membership is going to challenge this, and they are held accountable. They are elected or can be removed from their position. So I wonder if this would they prefer to have this thrust upon them, or would they prefer
they want a seat at the table. It's obvious. They want a seat at the table. They know that they're going to be pushed out of the debate, and if they don't come in with something, and that's why they're doing these. I was just reading they're doing all these town halls across the country to kind of explain to their membership. Those are going to be interesting television. I hope we get cameras to some of those, because they're going to have these big fights from seniors saying don't cut. Also, we just had the reverse mortgage story. So you've got seniors that are facing potential cuts to benefits and Social Security, and their home values done, and they can't get a reverse mortgage, which are still advertised thanks to Mr. Robert Wagner. Remember him?
Yes.
He's still advertising those things, and they're still very popular. So it's a little disconcerting I had a grandmother.
But the money's
I'm a
running
little
out.
worried.
The situation, I mean, in terms of the reverse mortgages, the banks are simply saying we're not going to invest in mortgages. I mean, you talked about volatile home prices. We don't have volatile home prices. We have home prices that are falling off. That's why the banks are getting out of this. There's a sense of realism out there to me.
I understand
that I
the financial
appreciate.
decision. I know that it's going to come down to politics, and let's face it, seniors go to the polls. They vote, and that's where I think this is all going to come down to. It's going to be fascinating to follow, and we're certainly going to be covering it on Fox Business. Well, folks, 1 year. Let's get an answer right now, Ashley. Stay with me. I'm going to bring in Dan North, Euler Hermes chief economist. So what do you think about the summer? I mean, it seems to me that the private sector is where the jobs are going to come from, but is that realistic, Dan?
Well, yeah, absolutely. I think what we've seen here in the last year or two is that the private sector is where the growth is going to come from. But it's as long as the government gets out of the way, I think that's a big part of the problem. Is not only uncertainty from the government, but for instance, the Jobs Commission came out yesterday with suggestions about how to create jobs. Well, 3 of the big suggestions were to get government out of the way, cut red tape for construction jobs, make it easier to get a visa to boost tourism, and make it easier to get SBA loans. So those certainly, that's where the job growth is going to come. We've lost a lot of government jobs, but we've got to get the government out of the way so we can grow those jobs.
You know, Jim Frischling and I were just talking about this before this segment. Jim, I mean, do you agree with what he's saying about where the creation's going to be?
No, I do very much. And what concerns me is the lackluster and even challenging housing market. It is about jobs. And I agree with you completely in terms of the regulatory environment is really a threat, I think, to a lot of even the largest firms. I mean, when the too big to fail firms are laying off people and talking about cutting, I don't think that bodes well for certainly many other financial firms or certainly for Main Street.
Hey, Dan, in terms of, you were talking about the SBA loans. I'm more concerned about private lending. You talk to almost any small business owner out there, and they say despite, you know, the vast bailouts that we gave to the big banks, too big to fail, there's still no access to capital at the ground level. When is that going to free up down there?
Well, this is so important. It's the correlation between lending to businesses and growth in the economy is very, very tight. You have to have lending. And so far, you've had really very little, especially to small businesses. Something interesting has changed in the past few weeks, though. You are starting to see growth actually in commercial and industrial loans. It's not small businesses, but it's a really important change that we're getting growth in loans. And I think, you know, perhaps it'll spill over into small businesses as well. Banks are very risk averse now, and small businesses, of course, are very risky. I'm afraid it might be some time, but there has been a change in banks. Instead of just saying, oh, we're ready to make loans, now they actually are.
Hold on, Mark. Another one of your print brethren is with me here, and
Hey,
he's
Mark.
got a million questions.
I mean, you're a
Go
Wall Street Journal reporter. You're good at what you do. You put this information. What level of sophistication are we talking about in terms of an investor that you would actually be able to use this information and make money off of it?
Well, I think there's 2 possibilities. One is if some investor has a particular interest in a particular company, they could, you know, in theory, have been able to track that particular company, or if they'd heard rumors, say, about a merger between Quest and CenturyLink, maybe they could have confirmed them through this kind of the mosaic theory of investing, as it were. I suspect that there's hedge funds who have quants and various other people who have just amazing database capabilities. And if this sort of information was available, which hopefully we can get into in a few minutes, you know, on a real-time or near real-time basis, they could relatively easily set up filters for, say, 200 public companies and then maybe 10 potential merger partners they think might, you know, they might be having talks with. And if there's a flight between their 2 cities, you get a little alert system set up. So it's not, you know, it may be difficult and only resource-rich hedge funds could do it, but I think it certainly could be possible.
Yeah, you know, Jim, here's the thing. You're an investor, and he's right. The hedge funds, because they do have really good analysis, could start to track this. But the critics of this, of making all this public, say that this could lead to corporate espionage. Do you think that's a problem or a concern?
I mean, I really did enjoy the story. I just felt it's a question of more or less transparency. And do you want more of it? And do you want that information available to all those who can go to this website and look for it? Or do you want to leave it opaque? make. And I believe the Galleon case had a lot to do with the use of expert networks. So this information is available now, but it's available through channels, in my opinion, are truly available to only it's illegal now, but it was only available to those with the most capital, most resources. That to me sounded much more like espionage than putting something out online that anyone can track, and only those investors that choose to actually commit resources to it might be able to benefit for it. And by the way, the mergers may not have happened. The meetings could have taken place, and at the end of the day, it fell apart. So there's still that risk being taken that if you're going to speculate that the meeting was successful, I still think that's risk. Anyway.
Well, Mark, it's a great